All right, hi everyone. I'm just going to do a quick market update over here. All right, so this is Terence Tan, the Chief Trainer from Income Mastery Program. So I'm just going to talk to you a little bit about what's happening in the market right now. Yeah, all right, what's some of the things that you have to be worried about? What do you need to know over here? And how do you react from it? Yeah, all right, so any of you who are investing in the stock markets right now, this will be some good information that can help you over here prepare yourself for things that could possibly be upcoming and happening in the markets in the near future or in the near couple of weeks or days over here. Right, so let's get into it right now. So this is what I'm going to be covering over here. I'm going to be talking about what's happening in the markets right now. Okay, so let's go to that topic first. So when it comes to what's happening in the markets right now, let's look at some of the charts over here. First, I'm going to talk about the indexes over here. Right, and when we look at indexes, I'm going to specifically talk about the US markets. Yeah, all right. And when we talk about US markets, the S&P 500 is always the leading index for many to follow right now. And as we know, the S&P 500 has been hitting new highs throughout this year itself. All right, so it did so earlier this year. All right, and it just did again. All right, in the month of August itself. All right, so let's have a look at while the markets are hitting new highs, are there any concerns that we have that we need to take note of out there as well? Right now, so if we look at the S&P 500 chart over here that I've just put up, yeah, all right, I'm not specifically going to go into market timing or any particular indicators, right? But it's just to highlight to you some abnormalities that's happening in the markets right now as the market itself is trying to hit new highs. Right now, so we can see obviously that in the month of August over here, right, the S&P, if you look at my cursor on my mouse, the S&P 500 is hitting a new high. But as it's hitting a new high, right now, what you also stand to realize right now is in the S&P 500 index itself, there are 500 companies, but it's a market-weighted index. So when it becomes a market-weighted index, this is what happens over here. Let me quickly put up what I want to show you. Okay, so let me just quickly adjust it over here and let me sort it out. Okay, all right, now, so this is what I want to show you over here. So if you look at this particular brokerage platform that I'm showing you right now, and I've just sorted out S&P 500 over here by market cap, and what you realize is the big tech companies right now, right, which is Apple, right, which we know now that it's crossed over $1 trillion, all right, and Amazon as well, which has recently crossed over $1 trillion as well, but it's just come back off. Right, and of course we have Microsoft, who has done really, really well in the last 1 year itself, and it's hitting almost 900 million right now. And Google, right, if you look at Google itself, it split itself up into two different parts of a company, but if we add both of them up, they have actually crossed $1 trillion as well. Yeah, all right, as one holding company as a whole. Right now, of course, we have Berkshire Hathaway, all right, which is the non-tech company over here, right, and followed by Facebook after that. Now, but if you just look at the top 5 companies over here, let's take AAPL, right, which is Apple, Amazon, Microsoft, all right, the Google family, and Berkshire Hathaway over here. All right, can you see that we are already talking about 1.6, right? So that's 3.6, all right, 3.6 followed by another $500 million over here. So we are talking about almost $4 trillion of value when it comes to market cap in the index, just being controlled by 5 companies. And out of these 5 companies, 4 of them belong to the technology sector itself. Right? So as you realize, the technology sector, or what we call the big tech right now, is leading the markets. Right? And due to the heavy weightage that it has right now in terms of market value of these companies in the S&P 500, what's happening now is the big tech is literally single-handedly dragging the S&P 500 with its own weight. Yeah, all right, now, let me show you what I mean when I'm saying this over here. All right, let me just move this out of the way. All right, now, so we can see that the S&P 500 has been moving up on a general upward bias trend over here. But we know that predominantly from a historical standpoint, the financials has always been the heavy weightage when it comes to the S&P 500 index. But if we look at the financial sector, all right, so I'm just going to take the ETF to represent the sector itself. Right, so we're going to look at XLF over here, which is the financial sector ETF. So it comprised mainly of most of the big banks when it comes to the US stock market. And what you realize is, this financial sector in the whole year itself of 2018, it has been struggling. Yeah, all right, it's been struggling because, many people talk about the bond curve, the interest rate curve. That's really affected, the banks. Well, it should be a good thing for the banks, but, it's not really moved the stock over here, right? The financial sector had a bounce somewhere in July itself, yeah, and it starts moving into a short uptrend over here. But you realize in the last 2 weeks, yeah, all right, the last couple of weeks since the market hits the new high, right, the financial sector has actually been coming down, right? So what do I mean by the financial sector has been coming down? If we take some of the big banks in the US right now, let's talk about sorry about that. Let's talk about JP Morgan. Yeah, right. If you look at JP Morgan shares over here, it hit a high of 118, right, and it's since dropped back to 113 over here. Yeah, right now. So obviously we can see that this is now where we are talking about a short-term support, right, hitting a 20-day moving average. So where it goes from here is really going to be, a very interesting point, because if it's going to break down from here, we're going to see, a way down all the way to about 110, which is another $3 downwards over here. All right, okay, we literally break further down from there as well, right? And if this goes down, the financial sector is going to be dragged down. And of course, that's going to affect the index as well after that, which is the S&P 500. It's going to cause a lot of drag when it comes to the market, or for the index to continue going up. All right, another one we're talking about over here is, of course, Wells Fargo. All right, now, if you look at Wells Fargo over here, right, in recent days, all right, or just last 1 week by itself, it's actually fallen from 59 all the way to 55. In just the last 2 weeks, it's fallen from a high of about 59.50 all the way down to 55 over here. That's actually quite a substantial drop in a very short period. Yeah, all right, and during this period itself, what we're seeing is, we're barely seeing any sell-off, any drop when it comes to the S&P 500 index. Right, so we have many banking stocks right now that are suffering. All right, basically they are undergoing what we call correction mode, but it's not being reflected in the S&P 500 index. Right now, we talked about this just now, whereby it could be just what we call the big tech over here. All right, or what we mostly know now as the FANGs. Yeah, right, they control so much of the market cap right now that maybe all these companies are the ones that are still holding the market, or maybe they're going up. So the market is pulling up as well. But let me show you something interesting over the last few weeks. All right, if we look at the technology ETF over here, which is described by XLK, right? So you can see the technology sector ETF right now, and you would see that actually, all right, in the last 2 weeks alone, all right, we have weaknesses over here as well, all right, because we have actually seen Apple sold off from the peak after breaking the $1 trillion mark. We have seen Amazon crossed over a $1 trillion mark and then coming back off down as well. So that means Amazon share prices have gone down as well. Now, so what we're seeing right now is we're seeing that the S&P 500 index is holding strong, but two of its biggest sector that controls the bulk of the percentage of the index is actually weak. So where is the strength coming from? Yeah, right. And that's the weird part right now, because it seems like money is moving out from the financial sector. People are selling stocks in the financial sector. People are selling or taking profits on their technology stocks right now as well. But it seems that they're spreading the money all out across the rest of the index components over here. Right? That means what we are seeing right now is a distribution of the money. Yeah, right. And once this distribution of the money is done, and we continue to see weakness in the big main sectors of financials and these big tech companies over here, we may start to really see some correction coming into the market over here, and that would actually increase the volatility in the markets. Yeah, all right. Now, so this is where it gets interesting over here, because if we look at Amazon, yeah, right now, as I said over here, Amazon hit a high of almost 2050 over here, and has since come off to a low of almost 1950, all right, or about 1930 before bouncing back up in the last couple of days. Right now, so from 2050 to 1950, there's a drop of $100, right, in just the last 1 week alone. Yeah, all right. Now, if we look at Apple as well, right, Apple hit a high of about $230, and it actually came to $215, yeah, all right, or $220 before it started climbing back up with the recent news of the launch of the new iPhone as well. Now, so that's what I mean. Yeah, all right. Now, the tech sector, which is now really heavy when it comes to the S&P 500 weightage, is not really bursting out. Yeah, right. So, the index is holding strong without the help from the technology sector as well as the financial sector. Yeah, right. So where is this help coming from? Where is this strength coming from? Right. So that's the first thing that I want to talk about today. So, markets are really acting weird over here. So what can we do now to protect ourselves? All right, what are some of the things that we can look at? What are things that we can do to protect ourselves over here? All right, now, so the next thing I want to talk about over here is then what do you need to know? Yeah, all right, what do you need to know is pretty much what I've just covered just now, that, you know, if you're still long in the market, or you're still pretty much looking at stocks and loading up stocks for your portfolio right now, you have to really be really careful in terms of your allocation. Yeah, all right, how much of your total capital is going into the stock market, and on top of that, what kind of stocks are you picking out? All right, because I know there are many of you out there who are, you know, very much focused on growth, yeah, all right, or very much focused on, you know, momentum stocks over here. Right, but this is a situation where, you know, if you have any of these right now, you could probably be in a phase where you are investing in things that are too good right now, and everything is enjoying the perfect pitch right now. And if things should turn around, all right, and that's where you're going to be left suffering over here, right? Of course, we've seen Apple go from a, like, you know, drop off a few $100 just like that within a short month, yeah, all right, because things don't look well for them. Yeah, all right. Can you just imagine, you know, everything is prime. Everything is, you know, picked out right now for Amazon. Everything is good. The whole picture when it comes to Amazon is just rosy. But if something comes out right now and, you know, that would paint a picture that is not as rosy as it seems right now, can you imagine the impact that it will have on Amazon? Yeah, all right. We've seen that on Facebook as well. Yeah, all right. When the whole privacy breach came out, yeah, all right. What kind of effect did it have on its stock? All right, and we're talking about those kind of effects in just a couple of days when it happens in the market. All right, so this is the risk that we're talking about, because right now even the stock market is enjoying the best of times. All right, so when, you know, the overall conditions are enjoying the best of times, do you really want to go in with a heavy hand, or do you want to go in, you know, with the right opportunities over here, keep yourself protected, and also have that extra cash, right, when the correction comes about, to actually take advantage of it and reap the bigger returns when volatility sets into the markets? Yeah, all right. Now, so what can you do? Yeah, all right. What you can do right now is really to look out there, look for some of the best companies, look for some of the safest companies who are not enjoying any benefits of this bull run over here. Yeah, all right. And, you know, really start thinking about putting some of your money in those assets over here. And on top of that, from a, you know, a really differing point of view over here, you could look at sectors that could benefit if the stock market were to turn around. Yeah, all right. Now, what I mean probably is, you know, if you don't have an allocation in oil stocks, you could probably look at some oil stocks right now and move some of those allocation into oil companies as well. Yeah, all right. It's not that oil will be probably, you know, it's not that I'm really sure that oil is going to pick up, but right now, if you look at it, if I'm going to compare buying tech stock versus putting some money in an oil stock over here, right? The oil stock will present a better upside and lower downside compared to putting my money in Facebook or Amazon right now. Yeah, right now. So this is what I'm trying to talk about, and these are things that I always highlight to my students. Yeah, all right. When you go into a market, look at the market conditions right now. Yeah, all right. It's not, you know, something that is really difficult to know. It's commonsensical, right? Things. The S&P 500 is at a high right now, so that means everything is rosy. So when everything is rosy, do you also want to get yourself invested in the best things that are enjoying the best times out there? Or do you want to take a more contrarian view over here, an opposing view whereby, you know, when markets are good, let me look at good companies, but they're not enjoying the benefit of good times over here, right? Because, you know, they have already fallen as much as they can right now, and if market were to correct, they'll probably not fall as much as the companies who have enjoyed the good times along with the markets. Right now, so that's pretty much what I want to talk about today, and we can expect some volatility to continue to set into the markets because of the whole US-China trade war that's still going on. It's probably not going to end anytime soon, and as we know, you know, Mr. Donald, when Mr. Donald speaks over here, he's going to move the markets. Right, at any time he can move the markets in the wrong way over here, and obviously, you know, as an impossible investor, my community, we're hoping for that to happen. But if it doesn't happen, we'll keep churning anyway. Yeah, all right. Now, I hope this update helps you. It's useful to you as well, and I'll catch you in my next update over here on my next value-added sessions that I'm going to be running over here. All right, thank you. See you. Have a good day.